On this week's episode of the Crushing Debt Podcast, Financial Vampires. So welcome back to this very spooky Halloween Eve themed Crushing Debt Podcast episode. My name is Shawn Yesner, with owner and founder of Yesner Law. I have with me in studio, as always, your financial coach, George Cabello. George, take that scary mask off.
This guy's funny. Can I just say, some vampires don't live in castles. They live in your checking account. They sneak in that night, suck your balance dry, and vanish before sunrise. How are you, brother?
Good. Trying to figure out what I want to be tomorrow night for Halloween.
Well, I'm going to be a debt collector because I just want to go out there and collect debts because there's just a lot of debt that we got out there that we got to solve for. But doing okay, man. I was thinking Ghostbusters, but I think car salesman too. That's high on my list right now.
IRS. I could just wear a shirt that
all
says
scary.
IRS on it.
All scary, man.
So we normally I don't know what the right word is. I chicken out or I take the easy way out. So I'm a part of the Gasparilla crew.
Yes.
So most Halloweens I just put on my pirate costume and I wear my pirate costume. We did a couple of weeks ago, my son and I did the Spookery Boy Scout, Cub Scout camp out. Mm-hmm. And so now as a Boy Scout, my son got to work the spook trail and scare all the little
nice.
Cub Scouts. Yeah. So we had to buy scary masks for that. So this year I'm thinking maybe I go as a zombie pirate.
Ooh, I like it.
Or maybe like the original Pirates of the Caribbean where they're all skeletons.
I like it too.
I could wear one of those masks. So
well, that's awesome.
So
my youngest daughter, she got a gig at Zoo Tampa.
Okay.
For the scary nights, the fright nights kind of
fright
thing.
Nights.
So she is the snake lady, and she's going around the swamp and scaring the kids. And I went to see her, and it is kind of funny when it's like hello, and she's out there, but she's got the green face. She's got the it looks pretty pretty spooky.
Older daughter, which one is the actress?
The youngest, yes,
youngest.
that's
so
what
this
she's.
Totally fits.
This is her bill. She says, I'm not working retail right now. I'm going to go work as a struggling actor. So I was like, good for you. I was like, this is good. But it was a great, again, nice paid gig, and she's scaring people in the night. How can you go wrong?
I was going to say that's got to be the scariest costume for you is the out of work actress daughter.
Well, again, like I said, we're starting off, but the girl at least has a gig, and I love the fact that she's doing something that she loves doing. That's for sure.
No, that's awesome. So we have done a couple of Halloween themed episodes during the course of the Crushing Debt Podcast. Episode 85, we talked about zombie debts. 211, we talked about zombie cars. And episode 438, we talked about the debt graveyard. But this week, Count Dracula isn't the only vampire that's floating around out there.
No, I think everyone is feeling some type of like bloodsucker out there when it comes to their wallet. That's for sure.
Yeah, so that's what we thought we'd have some fun with this week and talk about all the different vampires that you might run into in terms of your wallet, in terms of your debt, in terms of your budget. The other thing that I would say is for those of you that are listening, this is episode 487, and so we are 13 episodes away from 500.
What?
So we are currently in the process of planning episode 500, but if you have any ideas on what you want us to talk about for episode 500, definitely let us know. It's going to be one of those milestone episodes that I really want to celebrate with all of you that have made this show such a success. So
let's go back to episode 1 and see how well.
We don't want to go back to episode 1. We don't ever want to go back to episode. I've told this story before that I was committed to release the podcast, and so the week that I wanted to get the first 3, 4, 5 in the can, I had laryngitis. And so if you go back and listen to the first roughly 5 episodes of the podcast, that's not my super sexy voice. That is Shawn with laryngitis.
Nicely done. But we'll make sure you stay healthy.
Yeah,
so when you get to the 500, you have that beautiful singing voice that you have every
That would be,
week.
hang on. That's me knocking on wood to make sure that episode 500 isn't the same sound quality or voice quality as episode 1.
Love it.
So So what are some of the vampires that we run into on a daily basis?
I mean, the more obvious ones that seem to stand out with a lot of my clients is for me is the subscriptions, right? We gotta. I think a lot of us cut the cord and we did. Oh, this is we're gonna save money. We're gonna do all these things, and yet in 2025, I feel like I need 17 subscriptions to have what I used to have when it comes to cable. Or if I want to see a specific show, it's on this network, it's on this thing, it's on this platform, and you don't realize like it's only $9.99, which is not $9.99 anymore. I feel like all of the subscriptions have gone up in price too. Now it's $14.99, it's $19.99. You want ESPN? It's $30 a month. Like, what is happening?
Well, and keep in mind, so I get the ESPN, Hulu,
right.
Disney Plus bundle through my cell phone subscription, but then my wife had a Netflix subscription, and so I had to cancel that Netflix subscription in order so that I wasn't paying for two Netflix subscriptions.
Right.
How many of us are paying for multiple subscriptions for the same thing?
Yes. I've seen they also now, because of the whole password sharing that they wanted to lock down on. So I'll give you a good example. In my house, I have a college kid, right? So she's not in my home. She's part of the household,
right?
But she's not in my house because, she's in college.
Right.
Yet I have to pay an extra $7 a month because she's in my household, but she's not in the same location because they think you can't share your password with people outside the home.
Yeah, and they can now tell that,
they do.
that it's being accessed by one IP address versus another IP address. I get all the time when I go out of town and I want to watch YouTube TV and I'm not at home. I get a message from YouTube TV that says, "Hey, are you traveling?"
Yeah.
They want to make sure that I'm not sharing my YouTube TV password.
Totally get it, but at the same time, I'm like, wow, that's an extra. That's a bloodsucker in my wallet. Like, wait a second. Maybe it's a time for me to tell my daughter, "Hey, you might want to pay for your own subscription
Netflix subscription
with ads."
Yeah. Well, and one of the other things that occurred to me was also going back to the cable bill itself. When I decided to cut cable, I was paying for cable. I was paying for a landline that I never used.
Right.
So I moved into my house in 2011, never plugged a phone into the wall. How many of you remember when phones were plugged into the wall?
What's a landline?
I know. How many of you even know what that term means? So I was
rotary phone. Yeah, like let's.
Yeah, I was paying for internet, phone, and cable TV on one bill. I didn't use a phone because I had my cell phone.
Right.
And I had YouTube TV. So I'm like, what do I need? So it's funny. I called the cable company. And I said, I want to cancel my subscriptions.
Right.
I still want internet. The only thing I want to keep
is
internet.
Makes sense.
And so this is Spectrum. And so they said to me, well, it's whatever price, $90 a month, whatever it ended up being. But we'll give you $5 off if you get Spectrum TV. I'm like, wait a minute, I'm not going to use.
Right.
They said, yeah, I know, we'll give you $5 off. Okay. So $5 off. I now have Spectrum TV. I don't think I've ever opened the app or ever watched it because everything I need is on YouTube TV. Now, interestingly, one of my friends is a huge hockey fan, and for whatever reason, YouTube TV doesn't have hockey.
The sports network or whatever.
Unless it's like on a major ABC,
Sure.
CBS. Other than that, they don't have any hockey. Now, luckily, I'm not really. I grew up in Miami, so I'm not really a big hockey fan.
Not into ice and
no,
okay,
no.
makes
ice
sense.
Is ice is for my Bloody Marys. So I don't really miss not having hockey, but that's where they get you is, you want to watch this series, it's only available on Paramount Plus.
Correct.
You want to watch this sport, it's only available on ESPN. That seems to be where we're heading.
Yep. And some of the things that I can suggest my clients, right? So you only have X amount of hours to watch a show, pick a particular subscription and stick with that and then cancel the rest, right?
Yeah.
Look for ways to be able to kind of like eliminate some of the bloodsuckers.
Right.
The other thing that, I noticed, at least here in Florida, but depending on where you're at, dude, you can get free TV with an antenna, which is kind of crazy. Like, again, antenna, guys. This is you stick up a thing in the air and you receive television. Again, depends on the technology. It depends on the frequency. What kind of the signal that you can get. But if you can get a good signal, I'm like, you can again, ABC, Fox, all those are free over the airways. So there's different ways to do it. It's just again, how much commitment do you have? That's what I would say.
Here's the one that I want to talk about.
Please.
And we've talked about it before, but it happened to me again last night.
Uh-oh.
The convenience fee vampire, and I've combined that with the tipping vampire.
Oh.
So I went the other
Just kidding. Okay.
I went yesterday and did a takeout order from a restaurant.
Okay.
It was a sit-down, nice restaurant, but I did a takeout order. So ordered everything.
Not Uber Eats, but it was
Uber
just
Eats.
through their company. They do delivery. Got it.
I
Okay.
ordered it, and it wasn't even delivery. I ordered it on the computer. Then I drove to the restaurant to pick it up.
Got it. Okay.
When I got to the restaurant, they asked for my card to pay for it. It, for whatever reason, wouldn't let me pay for it online. I had to pay for it at the restaurant. And when I gave them my card to pay for it, they turn around the little machine and it said, "How much do you want to tip? 20, 25, or 30% or something like that."
Well, that's the new standards now.
And I'm like, if I'm eating here and you're serving me and you're getting me drinks and you're getting me food and you're bussing the table, and no problem. But if I order it online, I drive to your restaurant, I pick it up, I drive it back to my house, and I eat it. I'm not giving you a tip, and I clean it up after I eat it.
Totally makes sense. Well, you gave yourself a tip.
I gave myself a
You're
tip.
like, good job. Here's some money so you can pay for gas to get back home.
Here's all the gas money driving around town. Nice job.
Yeah, and the funny thing is it's now starting at like 20, 25, 30% tips. I've back to the almighty TikTok. It's amazing. Some of the tip culture is still there, right? And we're getting these like, if you can't go out and give a 25% tip, 30% tip, you shouldn't be going out and eating. I'm like, but Shawn, you just said you went and did all the work to actually they prep the food. They charged you for the food, I'd imagine.
That's why
they didn't undercharge you so they could get a tip.
That's why the food costs what it costs, because I paid them to make it.
I'm floored in regards to this today. But I agree, convenience fee. A lot of people use Uber Eats, and that's, again, a convenience. I don't want to go to McDonald's, but, I can pay someone to go pick it up, bring it to me.
Right.
I guess I get that, but the hidden costs of convenience is very high.
Although, isn't the convenience fee nothing more than a tip? In other words, or I don't know.
Depends on the service.
Is the Uber driver, Uber delivery, Uber Eats driver getting that convenience fee? Or
No.
not?
I think it's it depends on the program, right?
Yeah.
It depends on the program. So they do build in a delivery fee, but it's never 15%. It's probably like $1, $2. There's a fee that's associated with. So it is, I would say, minuscule. It's small, right? But you can always add to the expectation around those, because again, you have someone who's bringing it to you. Boy, they're like, if you give $1, you're not seeing that food. Let's just put it like that. At the end,
I mean, I don't mind tipping the delivery driver.
No,
I get it. I don't mind tipping the delivery driver, but I'm not gonna. I guess I still go back to that rule. If I'm standing up and ordering and then taking my food to my seat or taking my food home, I'm not going to tip.
Yeah.
I'm sorry. That's why your prices are what they are.
Yeah. If you're underpricing, that's
not my fault.
You need to pay. I agree.
If they're underpricing, that's not my fault.
It's so scary. The tipping today is very, very nerve-wracking. But, Shawn, what I was told on the internet is if you can't afford a tip well, you can't afford to eat out. I'm like, I don't think that's how it works. Or dine in, or take out.
Well, so I mean, I would generally agree with that. If you can't afford to tip, you shouldn't eat out. But the other night, I was not eating out. I was eating at home with food that I bought. The only difference is a restaurant made it instead of me.
Yeah.
That's the only difference.
I kind of agree, but Shawn, there's no logistics here. You are the wrong. You are wrong here in this situation.
I'm sorry.
No,
TikTok.
I'm kidding. Of course.
I'm sorry, TikTok.
There is a convenience fee that we have to worry about, and I would say be careful with those hidden costs that are associated with anything that's convenient.
Yeah. So what else? What other vampires?
I would say the interest payments. The interest. guys, you don't realize, and I think most of us do. Like we have to use your credit cards to have is it's a tool, but carrying debt from month to month, we're not realizing store credits, credit cards, they're in the 28 to 32%. So you talk about tipping. You're tipping your credit card company each month for them to carry over debt month to month.
So so my older son needs dental surgery. A couple of weeks after this episode comes out, it's actually scheduled.
Nice.
So they gave me this program where you can finance the surgery.
Sure.
And you put some money down and you pay monthly balances on the rest. And you could pay, I think it was like 2 installments. You could pay 10 installments, 12 installments, 18 installments.
Sure.
Once it got, and I think 24, once it got beyond 24 installments at 0% interest, anything beyond 24 months, I think, required an interest payment.
Yeah.
And so I ended up taking, I forget, it was either the 12 or the 18 month because it was still at 0% interest.
Take advantage, yeah.
And I'll put down a larger down payment so that my payments are less at the 0% interest. But there are even those who argue 0% interest isn't the deal it's cracked up to be.
Really?
Yeah, so 2 things. Number one, what you got to be careful of is typically with those 0% interest deals, if you go beyond the term of the repayment,
you have
they
to
calculate
That
interest
makes sense.
all the way back to the beginning.
So you have to pay it within the time period.
Right.
They won't tell you in a sense of like, hey, this is your last payment. If you don't finish paying it off, we're going to charge you interest.
Right. And then the second,
the promotional, let's say the promotional.
Right.
Gotcha. Okay.
And the second part about it is typically those 0% interest deals tend to be a little bit more expensive than if you could just buy it cash.
Makes sense.
So
somebody's got to make money somewhere.
Yeah.
So nothing is done for free. You see the 0% and thinking like, oh, that's a great deal. But look at the total it's probably already baked in. And they're just saying, hey, look, we're already collecting it. We're just collecting it as part of the overall payment.
Now, my example is a little bit different. My son needs dental surgery.
Sure,
so, I've got to figure out a way to pay for it. And if I can't pay for it, I'll finance it. But, the payment amount between 24 months at 0% interest and whatever the next level was, 30 months at whatever interest rate, was only a few dollars difference. So for that, I just made sure that I had the monthly budget. I picked the longest 0% term, and that's
just
it.
Go with that.
Yeah.
I'd say definitely, but that's the game we're playing, right? So if that's available to you, you have to read the fine print.
Right.
When we talk about deals that are specific to just like even your credit cards, I'm going to do a balance transfer so I can kind of take advantage of lower interest rates. That still also ties with like, well, if you got to pay it off in X amount of time, if not, there's going to be a 28% interest rate after the promotional. Like you have to look at the fine print when it comes to these things. But I think the biggest thing in all of this is, interest costs you money and you're losing how much per month, how much per year. You don't realize like, wow, I can't invest because I'm like, well, I'm paying off a credit card.
Right.
That may not be paid off until like 1940, or say 1940, 2045. Let's put it like that. Let's add a 0 on that one.
There you go.
But yeah, that's for me is scary when it comes to interest payments.
Well, and kind of related to the interest vampire and the store credit vampire is the buy now, pay later vampire.
That's always, for me, that's the worst, right? We are in a society that's like, I got to get it now. If I don't get this sale, it's forever gone. The product is gone forever. They're never going to find it. But we know that there's so much that's tied to buy now, pay later.
Yeah.
There's just, it's convenient, but like, do you want to have payments on a shirt or an outfit
or groceries?
That's
Aren't there
very
some
popular.
grocery stores now doing buy now, pay later?
I mean, that's just for me, I think, the sign of the economy.
Do they come into your house and repossess your refrigerator if you don't?
How do you collect on that? That's correct.
They send somebody to stick their finger down your throat and make you give back all
Give
the
me that
food?
strawberry.
How do they?
What is wrong with you?
I don't know how
Take
they do
the
that.
tequila. Just take the tequila, please.
No, don't take the tequila. Well, take the tequila. Leave the bourbon.
Yes. That's the scary part. I think that's more of a reflection of where we are, some from the economy. Not everyone is trying to get by. So if it's credit cards, if it's buy now, pay later, it's just these are options that are now being made available for folks that are we're struggling. We're struggling out there to try to make ends meet. And we just need to, these are just options, but I feel like you're right. It feels like it's taking advantage of the situation.
And, we're having fun with it. We're making jokes about it.
Of course.
But I get it. I think the point here is if you find yourself in a situation where you're doing a lot of buy now, pay later, if you're doing a lot of financing on interest, you're doing a lot of financing on store cards, you're getting a 0% card and balance transferring and doing another 0% card and balance transferring. If you find yourself being chewed on by these vampires, that's when you reach out for help. That's where you reach out to George. That's where you reach out to me. That's where you reach out to anybody. Your religious leader, a friend, a family member. Reach out and get some help.
Anyone who can provide you help and provide that accountability, because at the end of the day, we will justify any purchase.
Right.
We will justify that vampire on our wallet all day. Like, it's not that big of a deal. It's only a little vampire. It's only a bat. It's okay.
It's only a bat. What other vampires?
Last one I would say for me is the lifestyle vampire. We again live in this society where we're inundated with social media that's telling us that everyone has more than we do. Right. So what we do in this instance for the vampire for lifestyle is just, trying to upgrade our lifestyle faster than our income. And then we've had these conversations, right? It's just really understanding what can we do differently to kind of like, let's live within our means kind of thing. And I think that's something we got to really focus on.
Yeah, there's no need to keep up with the Joneses.
Yeah, and so one of the other things that I would say when it comes to the Joneses, it's very difficult really to kind of like, okay, how do we understand where we are when it comes to the income that we have today, and then really what changes, what kind of thing that we need to do to say, what I have income wise is enough, what it is that is that we can do differently when it comes to the lifestyle that we're seeing around us, and saying, hey, I'm okay with what we have, I'm okay with what it is that we're doing, and not have to try to, achieve certain things, these goals, these things, these items that really put us in a situation where income-wise, like, okay, we're living above our means. That means another vampire is going to come out, right, and say, here's the credit card vampire because I'm paying everything with credit cards. I'm doing these kind of things itself. So recognizing, like, it's okay to kind of understand where we are today and live within that mean itself. I think that's key as part of understanding this vampire.
Yeah, no, I agree. The one of the vampires that I wanted to talk about, the one that attacked me quite often in another day and time, was the overdraft vampire.
Well, that's always, again, that's for me, that's a sign of maybe the budget's not so tight. Not understanding and again, when we're living paycheck to paycheck, it's easy to kind of like, okay, how, we're doing all of this shuffling of like, okay, I need, I have this amount, I got to pay this by this day, all of those kind of things. But yeah, there's moments where, if the budget's not tight, oh, wow, I didn't realize, like, I'm $5 overdrawn or $200 overdrawn because I thought this bill was coming out on Friday when it should have, but it came out on Tuesday.
Although the irony of the situation has always fascinated me. The bank is charging people that don't have money in their bank account to pay for what they tried to pay for.
Well, we try to tell you that that's and the funny thing with the bank, they stopped doing this, but remember when they used to like hit you up like each day? Here's another fee. Here's another fee. Here's another fee. It's like, dude, like I get it.
I had a friend of mine who was just bad at budgeting, and in helping him look at his budget, he was getting 3 to 4 overdraft fees a month.
Oof.
And I'm like, dude, each one of these, I think it was like $45 a pop.
Yeah, they're like, I remember between 25 and 40 or something like that. It was crazy.
Was between $90 and $180 a month.
Yeah.
And I'm like, dude, if you just stop, if you get better control over your budget and you stop the overdrafts, you're saving yourself $1,000 a year.
That's crazy.
What could you do with an extra $1,000 a year?
Yeah, I tell you, I get rid of some of that those vampires. That's for sure. But
well, and so as we're into October, You know, the other thing we need to start thinking about,
What's that?
the IRS vampire, the tax debt vampire.
Already, I just got rid of that thing.
I know, we all just filed based on our extensions.
I just did 5 extensions to try to get to this. So no, but yes, it is end of year. When we talk about taxes for personal and business, these are things that we're talking April right around the corner. It's like it's only a few months away, but it's and that's just for personal.
Well, and now is when I start to plan. So I've said this too. Every year I adjust. Now I'm lucky. I have a boss that allows me to adjust my withholdings every year.
Nice boss.
But I look at what do I anticipate my tax refund is going to be? Do I think my 2025 refund is going to be the same as my 2024 refund? If I think it's going to be roughly the same amount, I can adjust my withholdings so that my refund is less and I get more in my checkbook every month.
Makes sense to me. That sounds easy. Why is that that doesn't why are we not doing that already?
In my mind, that's the easiest way to make more money.
Yep.
Is to just increase your take home, and even if it's by $50 a paycheck, that's still $600 a year. What could you do? We talk about more money at the end of the month. You adjust your withholdings, you'll have more money at the end of the month.
Absolutely. So these are the little things to be more aware of to be able to fend off some of these vampires that we have. But let me I'm going to give you the term itself. How do you garlic your wallet? Because you got to get these vampires away. These are the little techniques, right, that you're thinking about.
I tried to garlic my wallet and it just ended up getting moldy.
All right, ka-dun-kun-ching.
Yeah. It's all the stuff we talked about. It's talking to somebody. It's confiding in somebody. It's budgeting. It's knowing where your money's going. Even if you don't formally budget, which, I do budget and I don't budget. So I have an idea every month of what I need to bring in order to hit all of my expenses. And I look at my budget every month. I look at my checkbook every month. Where did I spend? Where was spending higher this month? Where was spending lower this month?
Yeah, the budget's in your checkbook. It's okay. Again, it doesn't have to necessarily be a program or a spreadsheet.
Right.
You look at your, you go old school, my friend. I get that. So it's like, there's a ledger. He's talking about a ledger.
I
guys.
use my accounting system for myself personally. My accounting system is Excel.
Yeah, there you go. So you have something. It's just maybe you're thinking of more traditional where it's like this minus this, but you're still doing the fundamentals of tracking your expenses. I don't
have like, what is my budget for groceries, and am I above budget, below budget? What is my budget for electricity? Am I above budget? Am I below budget? I do have some of that for the law firm, but it's not. I don't necessarily. If you said, "Show me your personal budget," show me the law firm budget, I couldn't do that. But what I could do is tell you what my profit margins are for the law firm. I can tell you what my cost of goods sold are for the law firm. I can tell you what net profit, gross profit are for the law firm. For myself personally, I know how often my life insurance bill comes in. I know how often my HOA bill comes in. I know what I pay every month on my mortgage. So I have all those numbers and all that information.
Shawn, but if you knew, you can talk to a financial coach. They can help you really fine tune, because you can get that extra dollar at the end of the month. So I'll recommend it. I recommend it for you.
I'm going to go through right now and start canceling subscriptions. That's how I'm going to do that.
The other thing that you kind of talked about with kind of garlicking fending off all these vampires, for me, it's the boundaries as well. Keep in mind, like building the financial boundaries around people we're with. Obviously any bloodsuckers we have as family members or friends that going out, vacationing when we shouldn't be vacationing, things like that. And impulse buys in the night. Impulse buys in the night, because a lot of us, it's way too easy to just go, Amazon, send me something.
Right.
Just little things like that we, the changes in attitude, the changes in habits will allow us to be able to have more money and really kind of eliminate some of that impulse that we have when it comes to our spending.
Well, and the way that I thought about that friend or family member vampire is not only that, but it's also I had this happen last week. I had a gentleman call me who was in trouble with a foreclosure issue, and he said, my son is going to give me the money just to pay off this creditor and be done. And I think something like that is okay if you can afford to do it.
Right.
If you give money to a friend or family member, expect that it won't come back.
Correct.
If you want to keep that person as a friend.
I mean, think about it. It's more, is it a loan or is it a gift?
Right.
And I think most of us, when it comes to relationships, they're already in that situation where they owe money. You're going to lend the money. Are we really in this situation where we think that money's coming back?
I would not expect it to come back. I would say
It's a good way of thought.
Here it is. Enjoy. Do what you need to do. If you decide to pay me back, fantastic.
No obligation.
Right.
No, like that. The problem we run into with a lot of those types of lending, there's this silent expectation. Oh, he hasn't paid me back, and look, he's having coffee, he's drinking, he's doing this.
He's having a couple
That
of Starbucks.
Son of a witch. It's just little things like that. But I think you're right. I think if you're going to do a good deed, if you're going to help out a friend, I think eliminate the expectation of like, I'm going to get this money back. It's like, no, I'm just helping someone who I love.
Or if it is going to be a business transaction and you are expecting to get that money back, document it properly. Contact an attorney who can draw up a note, a mortgage, if it's going to be secured by a house, or draw up whatever documents or contracts or whatever, and have it drawn up the proper way. One of the other issues that I see, especially when I'm talking to people about filing bankruptcy, is they say, well, mom or dad loaned me X amount of dollars,
right,
or brother, sister, or friend, or whoever loaned me X amount of dollars. And we'll say, okay, well, number one, if they loaned you money, we have to include them in the bankruptcy because
Correct.
they're a creditor of yours.
Mm-hmm.
And have you paid them back? Yes, I've paid them back. Okay, fine. But if it's an insider, if it's a friend or family member that you've paid back, the trustee can go back 1 year and recapture those payments. So if you sent mom $5,000 because mom loaned you money and you didn't pay back Visa or Discover or American Express, the trustee could sue mom to get that $5,000.
Oh, wow.
So, but if you had a promissory note that you signed that said, if this is a loan and mom, I promise to pay you back, and I'm going to pay you back at 4% interest, and I'm going to pay you back over 5 years, and you have a history of showing that you've made the payments, it's going to be a lot more difficult for the trustee to say that was a gift.
Right, I gotcha.
They probably will still argue that.
They'll still fight you, but there's
it's
something
gonna
in
be,
paper.
You've got a little bit of a stronger argument if you've got all the documentation to show it was a transaction, you borrowed the money, and you've been paying it back.
Amazing. Didn't even think of it that way, but it's another layer when it comes to lending money or borrowing money from outside of, like, I mean, my bookie doesn't have, is that guy, he doesn't normally, he just takes knees.
He comes after kneecaps. he comes after kneecaps.
But great insight there, Shawn, as usual, man.
Yeah.
Now I know why you're getting 500, my friend. This is
500.
awesome.
Now you know why I have a podcast. So some of the other vampires we didn't get a chance to talk about. The credit card vampire, we kind of touched on that in terms of interest rates. The debt collector vampire, there is a way to garlic proof the debt collector vampire if they're being too aggressive in the way they're pursuing you for the debt. Mm-hmm. The identity theft vampire, I've had that one hit some people, some clients.
Don't like that witch.
The other one that I think we could spend a couple minutes on, the timeshare vampire.
Oh, my goodness. Yeah, but if you buy in on a monthly with a annual maintenance fee itself, you could have a weekend at this resort that's in the middle of Nashville. No, it is nowhere. Nashville's not nowhere. I know. But, okay.
I love Nashville.
Oklahoma. That's the middle of the country.
Right.
But yeah, it's
Gainesville.
It's amazing. It's amazing. But again, those kind of pitches are very good. They're calculated. And you're buying into points or buying into a weekend or buying into something that you don't own. I mean, you could pay that thing in full, and yet you still don't own anything when it comes to timeshares.
Here's something interesting that I saw with two different timeshare companies. So I had one client come to me. They had two timeshares. They wanted to get out of them both. Mm-hmm. So we contacted, it was two different timeshare companies. They both said the same thing, which was really interesting. They both said, well, if the person that owns the timeshare is current on their dues, we will consider taking the timeshare back. If we take the timeshare back, they have to pay X, whatever it was.
Yeah.
$1,000, $500, whatever it was. If they contact us directly to negotiate giving us the timeshare back. if a third party contacts us, an attorney, a timeshare exit company, whatever, if a third party contacts us to negotiate exiting this timeshare,
Sure.
it was like 3 times the exit fee.
Interesting.
So where the owner could call and pay, and I'm making up numbers, don't quote me on
you
this.
can always ask.
If they said, well, it's $1,000 if you own the timeshare and you contact us to give it back, it's $1,000 fee to give us the timeshare back. If you have a timeshare exit company or an attorney contact us to negotiate, it's $3,000. And I don't know why.
What's the science there?
I don't, other than maybe they want to try to encourage people not to
go that route.
Attorneys or timeshare.
Makes sense.
Now, in all fairness, some of those timeshare exit companies themselves are scams. Some of them, not all of them. So that could be why, or they could just be trying to make it more difficult for people to exit timeshares.
And I think it's more difficult. Obviously, it's one of those. But it's a fascinating concept on that too. So keep on.
So you got an attorney, you got a legislator, you got a timeshare company owner. Who do you trust the least?
My car dealer.
Car dealer. None of the above. So anyway,
holy moly,
a lot of vampires.
A lot of scary things out there. But how do you protect yourself? We talked about that, but I think it is possible. I think for us, be a little bit more responsible and put those boundaries when it comes to your finances. But I think it's your bank account shouldn't have to look like a horror movie scene, right? Like, we got to make sure we kind of stop letting these undead vampires going after our paychecks.
Well, so here's the last tip I will give.
Go.
For all you parents on Halloween. An easy way to teach your kids about taxes is to take 10% of their candy.
Yeah, but I did all the work. Yes, that's the point. That's a good idea. I think I'm gonna raise taxes because my kids are millionaires. They're rich with candy, so I'm gonna take 15% of that. So.
They have a whole bunch of those $100,000 bars.
I love it, bro.
Anyway, hope everybody has a fantastic Halloween. Send us your suggestions for episode 500. One of the ways you can send us those suggestions is you can go to the Patreon page for the podcast. It's patreon.com/crushing debt. You can go there and check out some of the behind the scenes videos, leave us suggestions, all that kind of stuff. We've also got now the Pancreatic Cancer Walk is coming up again in April of 2026. There's an opportunity to join our fundraising team to raise money for pancreatic cancer research, treatment, awareness, all that kind of stuff. I'll post that link on the podcast show notes as well. Anything else?
No, man. I think send us, email us, like, share, tell your friends, tell your mom, tell everybody. That it's a spooky time out there, but we love really spending time with you guys and really learning more about some of these bloodsuckers out there. But I love it, man.
Stay away from those vampires. Have fun on Halloween, and as we get to the end of October,
safe too. Yes,
be safe. And as we get to the end of October, we hope you have more money at the end of the month rather than the month at the end of the money. And we will talk to you in next week's episode.